Welcome back. As we look at the macro conditions of the market and understand where we should be investing, the question remains, do we flip bullish? In today's video, we're going to be exploring crypto, Ethereum, Bitcoin, the Bitcoin miners that have pivoted to AI, and more importantly, we're going to really talk about, and by the way, we also have some other crypto news like the prediction markets, Polygon, and more. But before we go to all of that, we really need to understand whether we should be flipping bullish, especially on robotics, because as the main crypto markets are potentially turning into a bear market or a downtrending market, and potentially AI bubble is bursting as well, there is not a lack of opportunity in the stock market and in the financial markets to still make money. And that's what this channel is about. We are about analyzing, is it time to pivot to other areas or other sectors of investing to make money and build our portfolios? And that question comes now with AI robotics. So make sure you guys are subscribed to this channel because we upload every single day of the year to bring you the latest happening in the financial world. Today, we're talking about the macro environment and robotics, AI, Bitcoin, and Ethereum. And don't forget to also give this video a free thumbs up. Sometimes we do deep dives on individual topics right here on the channel. You guys can go look at my other videos we upload every single day. Let's get right into today. Now, I think I was about to say today's video and it got cut off, but that's neither here nor there. Tom Lee has just confirmed Raoul Pal's thesis. Now, Raoul Pal posted a thesis, earlier in 2025, talking about the business cycle is driving Bitcoin, and that there's no more 4-year cycle because the business cycle is extended. Now, I've explained I don't necessarily agree with this. I actually think that it's very wrong. I don't think that the 4-year cycle is broken on crypto, and specifically on Bitcoin. It's been actually very accurate and very on point. But again, we heard the same thing in the previous cycle about the extended cycle, there's no more 4-year cycle, and we ended up entering a bear market, right? And so when you hear people saying that they're closing positions or that they're selling their crypto or stocks, and then you have people attacking them for what they're doing in their portfolio, it's usually a signal that they're correct, right? In the previous cycle, I told my viewers I was selling my Cardano because the market was clearly trending down. And literally, Cardano shills and paid insiders were making videos saying, go and unsubscribe from the Cryptoviser, he's an idiot, and stuff like that. Meanwhile, the price of ADA still, to this day, more than a cycle later, has not recovered to those levels that I sold at. So we were actually very correct. In the middle of this year, when we called the top of the Bitcoin cycle, when companies like Tom Lee's BitMine Immersion Technologies started acquiring Ethereum and the Bitcoin treasury companies started popping up, thousands of people unsubscribed from this channel saying, Cryptoviser, you're an idiot, you don't know what you're talking about. Meanwhile, it turned out to be accurate. Jim Chanos started shorting MicroStrategy based on the fundamentals that MicroStrategy was doing. Sell the stock, buy Bitcoin. That's literally what Jim Chanos was doing. All the MicroStrategy bulls were attacking him. Well, he was correct, and he made a ton of money because the price of MicroStrategy from the time he opened his position, a short position, to the time he closed it, it was down over 50%. So let's listen to what Tom Lee says about the cycle ending.
2026 is a year like there's a new Fed, right? But a dovish tilt, and at a time when the ISM's been below 50 for a record more than 3 years. So that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
Overall? Oh, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper's an industrial metal versus gold is money.
Right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year, we're betting against that thinking that new highs come early, like January.
So he's saying like January, we'll see new highs and potentially a relief rally, a bull trap, a bear market rally, a rotation rally. I don't know. I mean, at the end of the day, guys, I'm not opposed to that potentially occurring. I just haven't seen the data to show that that's actually going to occur, besides the fact of them saying, well, the business cycle this and the business cycle that. It's like, it does. The 4-year cycle is literally coded into Bitcoin. Now, what the price does during that 4-year cycle is a whole different story. But Bitcoin doesn't move based on the business cycle. It doesn't even move based on any individual cycle besides the 4-year cycle. And so we'll see what happens with this, but I'm not so confident, especially understanding what the Federal Reserve is doing. And this potentially, what we heard from the Federal Reserve in December, the end of 2025, is potentially a reason why we may see a relief rally in Bitcoin and some cryptos at the beginning of the year. I'm not 100% set on that just yet, but let's understand a little bit more. Jerome Powell more or less declared the recalibration phase complete, saying they're now well positioned to wait. Remember, they cut rates in September, October, and December, so 75 basis points. And based on the last year, well, since like September of 2024, they've already lowered rates almost 2%, right? 1.75%. And so now they're talking about pausing the rate cuts. And this is kind of in line with what we've expected them to do, right? Either in 2025 or into 2026. Because remember, Jerome Powell, his term is coming to an end, and we're going to have a new Federal Reserve chairman probably in the middle of 2026, and that's going to be very bullish for the markets. And I do think that there's going to be a time to flip bullish, but right now I don't know that it's the time. He blamed the committee divide on the unusual tension in the dual mandate and validated both sides of the debate, right? Maximum employment and low inflation. Well, both sides of the debate we're seeing a lot of people getting laid off. Now, some of these people are going to get severance packages, so they're not going to immediately claim unemployment. So that's a delayed metric. But we know that they're getting laid off, and we know jobs are not coming back because AI is replacing a lot of that. And that's kind of what we're going to be talking about in a little bit with AI and robotics. And so if people don't have jobs and they can't buy stuff, inflation is not going to go up. It's actually going to go down. So now you have this situation where inflation is coming down, but part of the reason it may be coming down is because people don't have as much money to spend because they don't have the jobs. And so that's that dual mandate in the back and forth there. And so that kind of puts us what is going on in the markets. We also have to keep in mind the biggest and most pronounced risk in the crypto markets right now is MicroStrategy. Because not only has the MicroStrategy price precipitously dropped since the middle of the year, like we were just talking about Jim Chanos, but MicroStrategy is now sending a sharp warning letter to the MSCI because we heard that Strategy may be removed from the MSCI index as their proposal targets removing digital asset treasuries from the indices. Now, in my view, the fact that MicroStrategy is sending this letter to MSCI, which is Morgan Stanley Capital International, tells me that it's almost a guarantee they're going to be removed. That it's almost like MicroStrategy's Michael Saylor is telling us, MSCI let them know they're going to be removed, and they're trying to counter that. But again, we want to trade the market that we have, not the market that we want. The bulls and the holders of MicroStrategy have been given a warning from the company itself. MicroStrategy is telling you they're probably going to be removed from the MSCI. And the bulls are like, no, we got to buy more and we got to support them. We got to support them. We got to sign their what do you call it? Petition. We got to sign the petition, and everybody got to support them so they can be not removed from the index. Meanwhile, the stock is down 60% on the year. 60%. It's down more than 60% from its highs last year. And part of being in a stock index is that you're not going to see constant dilution. You're not going to dilute the shareholders. This is literally counter investment. Why would you buy something knowing you're going to be diluted? It's the same thing in crypto, right? We have a lot of cryptos that continue to dilute shareholders by pumping and pumping billions of coins into the circulating supply. And we've talked about this with Cardano. We've talked about this with Ethereum. We've talked about this with XRP and Ripple selling coins on the open market. And the holders are completely ignoring these warning signs. And it doesn't matter what I think. It matters whether your portfolio is showing that you're correct or you're not correct. On this channel, our thesis has been very accurate for most of our calls, not all of them. And we never are saying that in investing, you're going to be 100% correct. You're not going to be. And if you're looking for a 100% win rate, you're going to lose, right? Because nobody has a 100% win rate. You could be close to 100%, but almost nobody has a 100% win rate. But you literally have the company warning you that they're going to be removed from the stock index. You have the company continuing to tell you they're going to continue to sell shares on the open market and dilute your shares as the price of Bitcoin continues to drop. And the holders are completely ignoring it. They're like, no, we got to sign the petition and they're not going to be removed. And it's like, I don't care whether I love Michael Saylor and idolize him or not. I don't want my portfolio to go down. So if I know it's going to go down, I know they're going to be removed. And I know this is going to create sell pressure. This is going to create downside pressure on the stock over the medium term. Why would I still hold it? I don't know the answer to that question. I really don't know the answer to that question. I think that it's just people get emotionally involved and in their investments, right? This happens in crypto, right? Where you have one ecosystem attacking another ecosystem saying our crypto's better than your crypto. And it's like, your crypto's down 70%. No, it's not. And it's like, no, it is. It clearly is, right? And so this is a channel about winning in our portfolios. And so if we know they're going to be removed from the MSCI, or that there's a very high likelihood that they're going to be removed, which they would not be sending a letter to MSCI begging them to not be removed if they didn't think that they were not going to be removed. They believe that they're going to be removed. That's why they're sending the letter. That's why Michael Saylor has a petition of support for the company. But that doesn't take away the risk. And so when we're looking at the macro risk in crypto, it's extremely, extremely high right now. And so again, it doesn't matter what I think. It matters what the data is showing us. Some Bitcoin buying firms are selling as losses pile up on paper. A report found that most Bitcoin stacking firms, these Bitcoin treasury companies, sit on unrealized losses, with a handful selling the assets as its prices fell in November. Now, we know companies have been selling some of their Bitcoin. And what I've explained to my viewers on this channel is, number one, the fact that they're selling in November could be because of to basically secure the losses. Because remember, with wash trading rules, you have to sell and then you can't rebuy within 30 days. So if they sell in the beginning of November and then they buy back at the end of December, they can claim the loss and still hold the Bitcoin. And if Bitcoin's at a lower price than when they sold, now their dollar cost average is brought down for the future. Now, this is fairly normal in trading and stuff like that. But the point is that they sold Bitcoin, right? And some of them sold Bitcoin to buy back their stock. And this is another warning. If they started selling, more are going to sell. According to a 122-page report published by Bitcoin Treasuries, a majority of Bitcoin buying firms are facing unrealized losses. Now, obviously, we know that. The data provider also found that 5 firms, including Hut 8, which is a mining company, treasury firm Sequins, collectively sold 1,900 Bitcoin, as that said prices fell to $81,000. They didn't sell at $120,000. They sold at $80,000. And when we hit $80,000, how many companies bought? None of them bought. They started buying again at $90,000. So this is something to keep in mind, because this is a warning signal in my view. And this brings us to the Bitcoin mining and the AI and the robotics space. Because even NVIDIA's CEO is saying Bitcoin mining is taking excess energy and storing it in a new form. It's called currency, aka Bitcoin. And you take the currency wherever you like. So you took energy from one place and now you transported it everywhere. Let's listen to what Jensen Huang from NVIDIA said here. And by the way, don't forget to give this video a free thumbs up and also hit the subscribe button. That way you never miss a new video we upload every single day. Let's listen to Jensen Huang.
Essentially, what Bitcoin is doing is taking excess energy, storing it into a new form. It's called currency. And you take that currency and you take it wherever you like. And so you took energy from one place and now you've transported it everywhere.
And so where are we moving now in AI? Well, number one, they're talking about moving AI data centers to space, but also the new big thing is AI robotics. The president is weighing a robotics executive order for 2026 and how robotics is quietly getting built out across the economy. This is really important to understand because these companies that we're highlighting here are potential huge buy signals. Especially, we know AI is continuing to grow. We know Bitcoin is potentially trending down. And everybody in Wall Street is always looking for the next best thing. And the next best thing, in my view, at this point, could be AI robotics. And so I'm not going to read through all of these because there's a lot of different companies here. We did a whole separate video on AI robotics that you can go watch. I think it's called Crypto. Robotics is going to take over crypto or something like that. Actually, let me tell you the exact title. It is called Pivot from Crypto to AI to Robotics and AI. Pivot from Crypto to Robotics and AI. There may be a few different titles, but effectively, yeah, robotics is going to leapfrog crypto. And that's just because of where AI is right now. And artificial intelligence, there may be in a bubble. But if AI and these data centers and these large language models are in a bubble, what's the next best thing? Self-driving, robots in your home, somebody to clean your dishes and fold your laundry. And that's what we're seeing, robotics. So much so that even Deloitte has this whole, what is this, a 6-part series on robotics. It says AI goes physical, navigating the convergence of AI and robotics. Powered by AI, traditional robots are becoming adaptive machines that can operate in and learn from complex environments, unlocking safety and precision gains. And again, as we're seeing this occurring, this is going to impact every aspect of the economy. It already is. We have coffee shops that are run by robots. You have a lot of, like fast casual restaurants and fast food restaurants that are all AI. I mean, even drive-thrus now. You go to the drive-thru and they're like, "Hi, what would you like to order?" And then you say, "Hi, can I get a soda?" And they're like, "Sure, what type of soda would you like?" And it's all AI. AI is taking your orders. And this is one small aspect of it. You see in other locations, robots are delivering packages. You see in other areas, Amazon has over 1 million robots in their warehouses. And this is all not just displacing jobs, but replacing jobs. And so there's a lot of people that are like, "Oh, well, AI is not going to take my job." And it's like, well, AI may not, but a robot may. And so obviously there's, still a need for humans, obviously, to do a lot of different jobs. And what a robot can do is very different than what a human can do. But there is something to say about this in protecting your job and protecting your financial future. It's going to get much harder to, all these people getting laid off from these large companies that were, in the tech world, people making $200,000-300,000 a year. Now they're competing with hundreds or thousands or tens of thousands of other people who are also laid off for those same jobs. And now there's less of those jobs. I was talking to somebody recently who was in a field of work where they were making, I think, well over 6 figures. I think closer to $250,000 a year. Now, this person that I was talking to that was making about $250,000 a year, they were in this career for many years, and I spoken to them before about are they worried about AI overtaking their job? Like, no, my job is secure, because they really believe that their company was not going to utilize AI to replace, but more utilize AI as a tool for their employees, because that's what they were doing. But little did they know they were utilizing these AI tools to train the AI to do their job for them. They didn't even know. They just thought it was a tool to help them. Meanwhile, the company was using it as a tool to train these AI to do their job for them. We're seeing this with vibe coding as well, with coding, dApps, coding applications, coding programs, all these different things that now AI is doing. And now if robotics comes in, now you have the physical aspect of it effectively being able to replace jobs. And all of these replaced jobs, I do think that it's just kind of a part of what's going to occur. There's going to be other jobs, but again, it's going to be more competitive. If you've been doing something and being paid $250,000 and they have to retrain to increase your skills to get at a higher level so that you can continue to get paid that amount and compete with all these other people, if you're not doing that, there's other people that will, and they're going to get those jobs way before you. And a lot of people are not preparing for this. And this is, it's the same kind of thing when you see like coal miners in areas of the country where coal mining has been forever. And then coal mining slowly kind of went away. And they saw that it was slowly going away, but they weren't retraining to do other things or moving into other areas of the country to do other things. And then the final coal mine closed, and then now there's no jobs for them. And they're like, well, what am I supposed to do? And it's like, well, you have to retrain, right? You have to get into another field that you may not be comfortable in, but you'll get comfortable in. You'll do really well. But a lot of people are not preparing for this. And this is really important to understand because it's going to happen regardless. And so, in my view, investing in that sector, in this category of technology, is a potential way to offset some of those losses, right? If you know your job is starting to use AI and robotics, probably it's a good idea to maybe look at investing in some of these AI and robotics companies to offset the risk of losing your job to these same companies, right? And by the way, this is going to happen. It's already happening in healthcare, right? And healthcare is a huge portion of the workforce in the United States. And so robots powered by physical AI are no longer confined to research labs or factory floors. They're inspecting power grids, assisting in surgery, navigating city streets, and working alongside humans in warehouses. The transition from prototype to production is happening now. It's already underway, guys. And so physical AI refers to artificial intelligence systems that enable machines to autonomously perceive, understand, reason about, and interact with the physical world in real time. These capabilities show up in robots, vehicles, simulators, and center systems. And by the way, we're also, continuing to hear about, I'm buying I'm buying a Tesla so that when I get full self-driving and robotaxi comes out, I can just rent my car out to go, pick people up and be a taxi. Well, guys, what about Waymo? What about Zoom? All of these different robots. I was just recently in a city that had these autonomous vehicles driving people around. And by the way, they were doing it for free, from my understanding. And the reason they're doing it for free right now is to test it, but also to get people used to it and using it. That way, so think about all these taxi drivers. If you can get in a taxi and you're going to pay $30 for a ride, or you can get in an autonomous vehicle and pay $15 for a ride, what are you going to do? And these companies are going to put a wall around it to make it very difficult for the average person to just buy a vehicle and turn it into a taxi. It's going to be these centralized companies like Waymo that are going to be doing it. And they're going to be making the money. And the people who program these robots or these taxis are going to be making money. And they're going to probably outsource all the customer support to overseas for much cheaper. So this is potentially going to eliminate a large swath of jobs. Now, this could take, a decade or so, but again, it's still going to occur. And so understanding that, going back to these robotics companies, this is potentially a great opportunity to get in at ground level before most people are even know about it, let alone are talking about it, and invest. And this is why I am starting to flip bullish on robotics. Now, some recent kind of news in it is EQT, or Equity, I guess, partners with 1X to roll out up to 10,000 humanoid robots across their global portfolio. EQT has partnered with US robotics company 1X to make as many as 10,000 humanoid robots available to its global portfolio, marking one of the most ambitious private equity-backed adoption plans for general-purpose robotics to date. This agreement gives EQT's more than 300 portfolio companies early access to these commercial production capacity and integration expertise. Adoption decisions will be taken individually by each of the companies, but the partnership sets the foundation for one of the world's first large-scale commercial rollouts of humanoid robots. Something to keep in mind. We also are hearing here, this is from December of 2025, Mercado Libre and Agility Robotics announced commercial agreement to deploy humanoid robots. Again, this is already happening. This is from Uruguay and I guess Oregon? I think that's Oregon. Anyway, it says Mercado Libre, the publicly traded company, by the way, the leading commerce and fintech ecosystem in Latin America, announced a commercial agreement with Agility Robotics, creator of the leading humanoid robot called Digit. This partnership will integrate Agility Robotic revolutionary Digit humanoid robots into Mercado Libre's facilities in Texas. And Texas already has issues with, good paying jobs, right? A lot of people, they've done a lot of development and a lot of growth, but we're starting to see rent prices come down, people starting to move back out of there because the jobs are just not there. Digit will initially focus on tasks that support commerce fulfillment, aka like warehouses, with the companies planning to explore additional use cases where AI-powered humanoids can augment logistic operations across Mercado Libre warehouses in Latin America. So like I said, it's already happening. But we can complain about it or we can capitalize on it. And again, publicly traded company. Moving right along into crypto and some other news that's happening in the crypto space that could change the landscape of crypto and the financial markets forever. Gemini Crypto Exchange has won a CFTC approval for prediction markets and may expand into crypto futures, options, and perpetual futures. So what is going on here? Well, the CFTC chairperson, I have it actually right here, confirms that you'll be able to use Bitcoin as collateral in derivative markets. We'll get to this video in a second. But beyond that, the CFTC also granted Gemini a designated contract market license that will support a prediction market launch and possible expansion into crypto futures, options, and perps. Now, they applied in 2020 and years after they finally got the approval. So we're starting to see this with Kalshi, with Polymarket, and now here as well with these prediction markets. I think these prediction markets are definitely going to become big. How big they become and how big they stay, that's going to be a different story. Probably depends on how much money people lose in these markets, to be honest. But this is still a great kind of announcement that we heard. We also heard that CFTC Acting Chair Caroline Pham, this is her right here, she's named the first group of exchange CEOs to the new CFTC CEO Innovation Council, a forum that will tackle market structure issues in the derivative markets. These include the CBOE, CME Group, Bullish, NASDAQ, Bitnomial, Kalshi, Polymarket, Crypto.com, LSEG, Kraken, International Continental Exchange, which is basically the New York Stock Exchange, and Gemini. These CEOs will advise on issues including tokenization, perpetual futures, prediction markets, 24/7 trading, and blockchain-based infrastructure. So as you can see, a lot of what the president has pushed for with making financial markets more open is huge and it's big. And this is very important, and they need to get this done before the next presidential election, because if the administration changes, we know that they're probably going to push back on a lot of this. And so the quicker they get it integrated and approved and people using it, the more likely it's here to stay for the longer term. And you can see that they are moving very rapidly to actually do this. And so these are bullish signals for the crypto markets. But again, a lot of this is going to take some time to actually fully bake. And that brings us to Polygon, Ethereum's premier layer 2 blockchain. Polygon's Madhurigi, whatever that word is, Hard fork has lifted the throughput to 1,400 transactions per second. The CEO of Polygon said that they're aiming for 5,000 transactions per second in 6 months and up to 100,000 transactions per second in 12 to 14 months. Now, if you guys have been watching my videos for any length of time, and by the way, if you haven't, make sure you guys are subscribed to the channel. You can also become a channel member by clicking the join button down below. I think it's important to understand that, a lot of these blockchains have been talking about, these huge numbers, million transactions, trillion transactions per second for years. And many of these blockchains have not been able to achieve this. And if you look at Polygon's price, Polygon is at, I think, all-time record lows right now, under 15 cents. And this is just kind of in line with most of the altcoin ecosystem. I personally am still a Polygon bull. I'm very bullish on the technology. But from a coin perspective, I actually don't think that most altcoins are ever going to perform the way that they have in previous cycles ever again. Because most haven't performed in this cycle. And most haven't even hit their all-time record high from the last cycle in this cycle. So how could they do that? But again, the technology is there. This user said, what is the mad hugiri of hard fork with Polygon? This is a major protocol upgrade that went into effect on December 9th. It introduces key performance, security, and cross-chain improvements that strengthen Polygon's infrastructure for high-volume applications. This upgrade is powered by 3 Ethereum improvement proposals, 2 Polygon improvement proposals, all focus on optimizing gas usage and preventing network overload. This has created a 33% higher throughput, like we just talked about, more transactions, 1 second block finality, new bridge transaction type from Ethereum to Polygon, future-ready upgrade designs, and better security and resource management. Some of the strategic benefits are supporting high-frequency apps like stablecoins, payments, gaming, and real-world assets, running more efficiently. Enterprise-friendly. The higher speed and predictability make Polygon more attractive for institutional deployments. Less congestion, more transactions per block, and faster finality equal a smoother user experience across peak periods. And the developer advantage. Builders can now scale dApps without worrying about block limits. And so all of this is great, but if you're an investor in Polygon, what is the Polygon price doing? As well as most of these other altcoins. And so this goes back to the beginning of this video, right? Are we moving into a bear market? And if we are moving into a bear market in the crypto world, what does this mean for the other areas of the financial markets like robotics and AI? Are these investable? Well, based on today's video, I think the answers are very clear. And you guys let me know what you think down below in the comments of this video. Don't forget to give the video a free thumbs up. Also hit the subscribe button. Check out my other videos on this channel. We upload every single day. And other than that, I'll see you on the next one. Thanks for watching.